Hey there, mamas. I'm Chelsea, founder of Smart Money Mamas, and today we are going to open a Roth IRA at Vanguard. We're going to do the complete process on the screen from starting your account to funding it and picking your investments. So make sure you hit subscribe below this video, hit the little bell to be notified when we release new content, and let's dive in. All right, mama, so when we go to Vanguard.com, it's going to reroute us to this page, which is for whether you have a retirement plan with them, institutional investors, all different kinds of things. We're going to want to click personal investors because we are individual investors. We're going to scroll down right here. We're going to hit open an account. Okay, this is the first thing. Now, the question they're going to ask you is, what would you like to do? You can open a new account or move an account or assets to Vanguard, right? And so in this case, I am opening an account for a friend who does not currently have any, other investment account. And so we're going to hit start a new account. Then they'll ask us, how do we fund this account? Do we want to do an electronic bank transfer or another Vanguard account, right? Do we want to move this from our current bank or from another Vanguard account? Do we want to roll over from an employer plan? So if you have a 401k from a company that you've left and you now want that to be managed at an IRA at Vanguard, you would click this button. Or transfer investments from another financial firm. You use another broker, you use Betterment, you use Fidelity, and you want to switch to Vanguard. This is the button you'd click. But like I said, this is a new account for a new person, so we're going to hit continue. And then it's going to ask us, do we already have a login? No, I'm new here. I don't have a Vanguard login. Yes, I do. So maybe your company uses a 401k that's managed by Vanguard, and so you already have a retirement account login, but you don't have a personal account login. You would make sure you hit this button and log in, and it'll help you create a brokerage. But once again, we're new here. We're clicking we're new here. All right. So this is the things that we're going to need. We're going to need our bank account and routing numbers and your current employer's name and address if applicable, okay? They make this process as easy as possible. So what we're going to do first is choose an account type, then we're going to complete an online application. You'll see me do that. And then we'll start investing in 3 to 7 days, okay? So we can't choose our investments until the account is funded. So this video is actually 2 parts. I'm recording this part now. In 3 to 7 days, I'll record the second part on how to choose your investments so you guys can see the whole process. But this does take a few days to do, okay? So we're going to hit continue. Now, what kind of account do we want to open? In this case, we want to open a Roth IRA, which would be a retirement account. But we can also choose a general investing account, which is just taxable, individual, joint, or trust. We can open a 529 account or an account to invest for our kids or some kind of small business retirement account. But in this case, we're doing an individual retirement account. And we can choose whether we want a traditional IRA or a Roth IRA. With a traditional IRA, your money is tax deferred, which means you get a tax deduction on that money this year. And when you remove the money in the future, you pay income taxes on the withdrawals. A Roth IRA is not tax deductible. That money goes in post taxes. But when you remove it in retirement in 20, 30 years, there are no capital gains taxes, no income taxes on the back end. And so in this case, we're doing a Roth IRA. So we're going to click on a Roth IRA. All right. And then we're going to hit continue. All right. Tell us about yourself. So I'm going to tell you about my friend here. My friend's name is Catherine. I'm not going to tell you the rest of her name because that would be not helpful. All right. I'm going to put all this in. I'm going to blur all this stuff out so you guys can, but you can see what we're doing here. Okay. Her citizenship is U.S., her social security number. This is a very secure platform, so you do not have to worry about putting your account information in, okay? So now we've got all our information in, so we're going to hit continue. Now we need to know mailing address. This is important. This is where you're going to get all your filing information and that they make sure that it's the right person connected to tax things and all that stuff. We don't want to. All right, so that fills in. Street address is the same as my mailing address and phone number, okay? All right, all this information is in place and now we hit continue. All right, so now it's going to have you verify the information that you've put in so far. So I'm going to check all of this, make sure it's correct, and hit continue. Now we're going to set up a username and password. So I'm going to pick a password for my friend here. We're going to enter a password that works for them. Now they're going to change this later. Okay. And then we're going to consent to e-delivery and website terms of use. Okay. This is basically just making sure that we're okay with being paperless, that they're going to send us all our notifications, prospectuses, and things not in paper, and that we can download and print them as needed, and then making sure that we're okay with the website term of use. So we're going to hit okay and hit continue. Now we're going to set up security questions. And so Let's take a moment. I'm going to hit pause. I'm going to fill out the security questions for my friend Kate here, and then we'll continue on. All right, so we've got these questions all filled in, these security questions, and now we're going to hit continue. All right, so now you have to put in your bank account information. This is how you're going to fund the account. Now, I'm not going to put all Kate's information up here for you guys. That would be crazy. But what I want to show you first is that you can either do a checking or a savings account. Make sure you've checked the right thing, and make sure you nickname your account. So for some people, we're going to attach multiple accounts to your investment account at some point. And so it's kind of nice to have, a simple nickname. Your routing number is easily found on the bottom of your checks, or usually your bank, as soon as you log in, will have that information front and center. Your account number is a little more secure, so you either have to click a button to have them show you your account number, or request it. You can see it on your statements usually. And so go there, find your routing number, your account number. You're going to have to do this twice. If you need help, you can click this button and it'll show you where to find your account number and your routing number on your checks. Nickname it, and then we'll carry on. I'll be right back. All right, so Kate's information is in. We're going to hit save and continue. All right, so how will we be funding our initial investment? We can do, like we said, we can do a rollover, an account transfer from another account if you have one, and that's how you prefer to do your funding, but we're going to use the checking account. All right, is this money coming from an indirect rollover, an employer plan, or IRA? No. And so if you are someone who has had an individual retirement account or an employer plan that you rolled out to cash and now you're funding your Vanguard account, that is when you would check yes. You have to make sure you do that to track properly for tax purposes. But if this is just cash that's going in for the same amount, we want to make sure that it's there, okay? So for Kate, you have two choices because we're currently recording this on March 9th. We can fund our IRA contributions up until April 15th, up until the tax filing deadline. And so we can put money in either for our 2021 contribution or our 2020 contribution. There's a $6,000 maximum. And so if it's early in the year and you want to put in for last year so that you still have the full $6,000 to do later in the year if you want, you can absolutely do that. So you have to select if it's this point in the year, right, where it's right before tax season, they're going to give you both numbers. If it was like April 16th, you would only see 2021 contributions. So pick how much money you want to put in this account. All right, so for Kate, we're going to do a 2020 contribution so that she has her full amount to do 2021 later in the year if she wants to. We're going to hit save and continue. All right, tell us about your employment. We're required to collect this information for regulatory reasons. So Kate is self-employed, and so she works for her own company. She does freelance work. And so for this information, she's just going to put in her own information. She doesn't really have a company name. And then they're going to check all that applies. So my spouse is a Vanguard employee. This is important to note for regulatory reasons. I'm an associated person, or another person who will have financial interest or trading authority over the account is an associated person. An associated person is someone who is a FINRA employee or someone who is related to someone with a stock exchange, a FINRA member firm. So this is like if your partner works for an investment bank or works for a hedge fund or any of those things, or is a securities dealer, you want to check this box, okay? This is how they make sure that people aren't doing insider trading. It can get you in trouble if you don't own up to that, if that's the case, okay? And the control person of a publicly traded company or a member of my household is a control person. So if someone that lives with you or your partner or you are a control person as defined by the SEC, which could be an officer, a board member, a large shareholder of a company that makes decisions for a publicly traded company. So this has to be a company that is traded on the stock exchange. You would click these buttons, or you would click none of these apply to me, which for Kate, none of these apply to her. Okay, so I'm going to fill in her employment details and we'll hit next. All right, all this is filled in, so we're going to hit save and continue. All right, please provide your income and net worth. All right. So your income is your annual income, anything that includes salary, bonuses, pension, Social Security income. Only include your sources of income, because when we talk about IRAs, this is really, you have to have your own earned income. If you're a stay-at-home parent, you can still open an IRA, and it's basically becomes what's called a spousal IRA, and you can do it based on your partner's income. But if not, you have to note, because otherwise, if you don't have earned income, you can't actually open an IRA. So you have to put in your annual income. And then what is your liquid net worth? Okay, this is assets you can convert to cash in a relatively short amount of time. Your home is not liquid net worth. It's not easily able to get the equity out of your home. But it does not include sources of income like salary, right? You don't actually have that money yet. This is money that is in your name, that is in investment accounts, that is in cash that you could easily access if you needed that money. This is also going to play into how much you invest, like all that kind of stuff. It's just numbers they have to know for regulatory reasons. It's not anything Vanguard's necessarily going to do anything with. It's just they have to report it. All right, so these are filled in, and we're going to hit save and continue. All right, so what are the sources of money going into this account, right? And so we have a lot of different questions here. For retirement accounts, it's supposed to be money coming from your salary, right? All of these other things that while they can fund investment accounts, we really want to make sure that its salary is what is funding your IRAs, okay? But it could be retirement, general savings, sale of property or business, corporate income, all of these different things. And if you click choice not listed, it says much specify. You're going to have to spell out where that money is coming from. They want to know. This is, once again, for regulatory reasons, we want to make sure we're not laundering money, all those kind of things, which of course you're not doing. So salary, Social Security benefits. Hit continue. All right, now indicate your goal for this account. Once again, this is all about regulatory reasons. This isn't going to limit what investment options you have. This is just going to say, what are you doing with it? So capital preservation means that you're trying to keep this money safe. The money that you're putting in, you don't want it to decrease in value. You just are looking for a place to house your money, basically. Income, you're trying to get actual cash flow from your investments. These are things like dividends or interest payments that you want regular money coming out of your investments to possibly live on or do things with, okay? Growth is you want capital appreciation. So this is you want to buy a stock at 10 and have it go to 20, right? You want to actually have the value of your investments grow and continue to snowball. And then speculation, this is aggressive growth. This is when you're taking a lot of risk, huge fluctuations in value, and you can lose a lot of money doing this. This is almost nobody is clicking speculation, right? But for Kate, we're going to choose growth is her main thing. We can select up to 2 objectives. If we were going to select 2, I would say growth and income. But I don't really think Kate wants income until she's really in her retirement ages. And so we're going to focus on getting her growth, okay? We're going to hit save and continue. And now we have our reviewing our account application, right? This is telling us the account type, where we're contributing it, what do we want to do with dividends and capital gains, okay? And so what does that mean? If you have investments in your Roth IRA, what do you want to do with it? There's 2 choices. One, that money can build up in cash and you can invest it when you're ready. Or you can reinvest any dividends or interest into your account, and that means that money stays invested and working for you. I almost always recommend that you have reinvest distribution so you don't get what we call a cash drag, which is cash sitting in your account not working for you. But if you don't like this, you can change it after your account opens, and you can set it to cash. Funding method, we just want to look through all of these things, all right? And what are we going to do? Money market settlement fund. What that means is when new money comes into your account, you deposit account from your bank account. If you haven't selected a way that money is going to be invested, and in the future, after your initial opening, what you can do is change that so that it automatically gets invested, that doesn't sit in cash. But for the money that we've attributed to Kate's new account or to your new account, it's going to come in from your bank and sit in a money market fund, which is basically like a bank account. And it's just going to sit in cash until you choose investments. Let's remember that Vanguard itself is not an investment. It is a home, a box for your investments. And so you have to go in and make sure that money is actually cleared off. All right. So we've got profile, employment. Let's make sure all of this is correct. Review all your information and then just hit save and continue. All right. And so now we have to review and sign new account agreements. So I'm going to pause this. I'm going to turn it over to Kate to sign everything, and then we're going to come back together. So Kate reviewed all those documents, which was mostly just a permission to open the brokerage account, permission to file, tax it, like submit to taxes on our behalf, things like that. And so we clicked the button at the end, we hit submit application, and now our account has been opened. We have an account number, which I of course have blurred out, and we are in the stage where money is moving into Kate's account. So exciting. So we're going to pause this and we will come back together to actually choose our investments after the money has hit her settlement fund. All right, so it has been a few days and the account is officially funded. We have some money here that we're able to invest. And as you get to this page, the way to do it is go to My Accounts Account Overview. Okay, it's going to show you how much money is here. And this says that this money is sitting in a money market fund, which is basically a settlement fund. It's effectively cash, which means your money is not invested yet. Remember, as we said earlier, your IRA is just a suitcase that you pack your investments in. And so right now, Kate has $2,000 in her investment account, but it's not yet invested. And so now we're going to choose what her investments should be. Okay. So the way that you would do that is you would hit this buy and sell button. You're going to have a whole lot of options. One of which is going to be buy Vanguard funds. That indicates mutual funds, which are a little bit different from exchange traded funds, which are below. And so depending on what you want to do here, you're going to click either of these two buttons. Buy Vanguard funds, trade Vanguard ETFs. If you want to buy individual stocks, you want to buy like units of Tesla or units of Google, you would hit trade stocks and listed securities, okay? But for most cases, you guys are going to want either Vanguard funds or Vanguard ETFs. So let's take a quick look first at mutual funds, and I'll show you why for Kate, we're going to use ETFs and why, depending on the value of your account at the beginning, you're going to want to use that, okay? So here is the trading page, and it's not the most beautiful page. Vanguard is not known for the best, beautiful interface, but it works just fine. And so what we want to know is we're not buying anything yet. So we need to hit add another Vanguard mutual fund, okay? And when we do that, we can either enter the name and symbol number if we know it, but most of us don't. So instead, we're going to hit select from a list of our funds, okay? So these are all the Vanguard available funds, and what you might see when you first click in here is that all of these things are closed up, and so you might be looking here wondering, what is going on? What am I looking for? And so what I want you to be able to do is first, we're going to take a quick look and hit this button, which is target retirement funds. If you're new to investing, you don't want to worry about balancing your risk or figuring out your asset allocation. These are great options. They're relatively low fee. One of the first numbers we want to look at here is our expense ratio on the right-hand side. This is the underlying cost of running the fund and what you're going to get charged as your investment costs. Vanguard doesn't have transaction fees for buying their own mutual funds or their own ETFs. So your only underlying cost basis is going to be this expense ratio. And as you can see, it's very reasonable, 0.15% being the highest amount. And so if you were going to buy a target date retirement fund, your minimum investment would only be $1,000. So Kate has 2,000, so she could buy this, and you would just simply pick the year closest to the year that you want to retire, right? So if you're currently 30, like I am, and you want to retire around 60, 65, we'd be talking about, 2050, 2055 target. That would mean that it would manage your risk, and as you got closer to retirement, it would make your investments a little bit safer, and you'd be good to go. So that's a good option to choose from, okay? But if you didn't want to do that, one of the other things you can do is choose index funds. So the reason that I recommend index funds is when you hit management, there's two buttons here. There's active or index. Active means there's actually a portfolio manager sitting behind the scenes and a whole team, most likely, trying to pick the stocks or the bonds that are going to outperform the market as a whole. What happens is the fees for running those investments are higher because you have to pay the salaries and pay the research costs of the person who does that job. And statistically, those funds actually underperform the market as a whole over time, over the long term. They might win in a 5-year period, but over a 30-year period, over 90% of them are going to underperform. And so what I would recommend is take the lower fee accounts, which are index funds, and make sure that no matter what, you match the market. So when we click that, what we see pop up is a few things. We see the target date retirement funds we had before, because on their core, those are index based. They're going to own total stock market fund, total bond market fund, total international stock market fund, total international bond market fund. They're just going to stick to those core indices. And life strategy works the same way. This is more if you're trying to invest for a goal that's not retirement, that you wouldn't necessarily be doing in your IRA, something for like saving for building a home or saving for, your kid's college or something. You might choose one of these life strategy funds. But what's happening here is that it's not showing us investments that we can't currently invest in because of the amount that Kate has in her account. And so what you can do is hit fund minimum, and it kind of has all these things. Share class, and it'll show you like low cost investor. So these are the expense ratios. Lower cost admirable. Admiral means you have $10,000 or more in your account invested with Vanguard. You can then access the Admiral funds, and then institutional would be more if you were a company. But if we click this, it shows us all the different indices. And I think this is important to remember that there's not just one index. There's the S&P 500, which is 500 of the largest public companies. There's the total stock market index fund. There's the total bond market index fund. But beyond that, there's all these little pockets of the index, right? There's just the energy stocks or just the utility stocks. And so what you want to look for is the word total, or, kind of that S&P thing. So in general, we have the total bond market index, the Admiral shares here. You can see that has a even lower than the target date retirement fees. That's 0.05% versus 0.15% with target date, which is why some people might choose to use a 2 or 3 fund portfolio. We have a link to an article explaining the 3 fund portfolio below this video. 2 or 3 fund portfolio is lower, or a total stock market. And we're going to have to scroll pretty far, and I might not be able to find it easily. But you can see 500 index, so that would be the S&P 500. And I'm just looking for total stock market here for a second. But what you're going to see is, total international stock index. That total word is going to be really, really helpful. And I don't know. Yeah, here we go. So if we do total, it'll show us, it'll highlight for us. Total stock market index, okay? And so that has a 0.4%. And so if Kate had more money in her account, we would probably use mutual funds over ETFs. The biggest difference for investors like you is that you can buy partial shares of a mutual fund where you can't with an ETF. And so all of your money would be put to use if you could do the mutual funds versus only the full share value. So you might have a little bit of cash sitting over that's sitting in cash until you can buy your next whole share. That creates a little bit of a tax drag with an ETF, but you can to get around that, you can either use your target date retirement funds, or you could wait until, you could use ETFs until you have enough to move into mutual funds, okay? Because in a retirement account, you luckily don't have to worry about capital gains taxes and things when you're trading. So you could trade from an ETF into a mutual fund, not worry about any taxes and move forward. But now we're getting a little bit complicated, right? So those are the things you want to look for. If you're going to buy a mutual fund, I would recommend looking at either the target date funds or any of those index funds with the word total in it. But for Kate, we're going to use ETFs because she's going to use a 2 fund portfolio, which is just total stock market, total bond market. This gives her really good diversification with low fees, and it's easy to follow. Okay, so to do that, we're going to hit back. And we're going to hit cancel. We're not going to place a mutual fund trade. And instead, we're going to hit buy and sell Vanguard ETFs. Okay, we're going to click that button. And then it says incomplete transaction because we haven't done it yet. All right, so this transaction is going to be a buy. We are going to buy something. We're going to look up the symbol for what we want. And we can do whatever we want here, but I want to do total stock, okay? And this shows me Vanguard Total Stock Market Index Fund ETF shares. So if I click that, that's VTI. And this is very low fee, okay? It's 0.04%, just like the mutual fund is. Okay, how many shares do we want? And so I don't know the exact number of shares that we want, but I can use a dollar to share calculator, okay? And so we know that Kate wants to be 90% stock, 10% bond. She is pretty far from retirement. She knows she won't need this money, and your asset allocation could be very different. It could be 60-40, it could be 80-20. But for Kate, we know it's 90%. And so 90% of 2,000 is $1,800, okay? And we're going to hit calculate. And so she can buy 8 shares of the total stock market ETF, okay? So we're going to use that for the trade, 8 shares. Now we have to pick what our order type is. And so for most of us, we're going to pick market. That means buy at whatever price the market opens at tomorrow, right, when things get started. A limit order is a public order, but it says that you want to buy at a certain price or better, okay? And so this might say like, hey, I want to buy this Vanguard Total Stock Market ETF, but I don't want to buy it unless it's 205. And so when it hits 205, place the order, okay? And stop, but that means it might never get filled, right? Stop means that you want a certain price or better, and that's private to you, okay? And so as soon as that price gets hit, it becomes a public market order, and it'll trade it wherever the next available price is, which means you could end up with a much worse price if the market moves right after that stop is hit. This is all for people who are doing more detailed independent trading. I would just set a market order for most of us, okay? Hit market, and then there's no commission. It's done during the day, and we're going to be buying $1,675 of this ETF, okay? So we're going to hit continue. If we submit this order, it's going to be in effect for the next regular trading session. So I'm currently recording this video at 7:30 at night. The market is closed, and all it is telling us is that the next day, this is going to go through at whatever price it's open at. I'm okay with that. I'm going to hit yes. And now we're going to hit submit. Okay. So now we're going to send this confirmation and all account documents by e-delivery. Okay. Now what I want to select for preferred delivery is that we're going to send all future confirmations as well by e-delivery. So they stop asking me this question because I'm fine with e-delivery. You can have it sent by mail, but that usually results in lots of paperwork, and we like to save trees. So we're going to hit continue. Okay, and now that transaction was pushed through, but we have yet to buy her bond allocation. Right now she's all stock, and we only have that. So now what we're going to do is we're going to hit trade Vanguard ETFs. We're going to do the same process again, but this time we're going to buy bonds, and we're going to do a buy transaction. We're going to look up symbol and do total bond. And we see these three options. We see the Direxon, I can't even know how to say that, total bond market, Fidelity total bond market, and Vanguard. We want Vanguard because then we avoid trading fees. Okay, we're going to do the dollar to share calculator again. 10% of 2,000 is $200. So we're going to calculate that. We can buy 2 shares. We're going to use that for the trade. We're going to do another market order, and then there's no transaction fee. We hit continue. Okay, market is closed. We know how this works. We hit OK. We hit submit on the order below. We send confirmations by e-delivery. We hit continue. And now we're done. Now her account is funded. As of tomorrow morning, those transactions will go through. Her money will be actively invested and will be ready to go. Now, I want to come back here for a quick moment and tell you about investing in the future, right? Because now your first investments are done, you're doing great, but you want to continue to contribute to your account over time. So let's talk about how we do that effectively. If you were, you're going to hit this contribute withdraw button. So we're going to hit contribute to your IRA, right? It's very easy. And then this is going to pop up. And so we're not going to be doing a rollover. We're going to be adding money, but this table right here is super duper helpful. It is not yet April 15th. So if Kate wanted to add to her 2020 account, she still could and save that $6,000 in 2021 for the future. But she can also contribute to her 2021. And this is going to show us, you can contribute. This line is going to make sure that we don't over contribute to our IRA and cause a problem at the end of the year where we have to either withdraw money or figure out how to balance for taxes, right? Because we're limited to $6,000 a year. When we do an investment this way, if you own the total retirement fund or you own mutual funds from Vanguard, you can have that money deposited directly into buying units of the mutual fund. Once again, this is because you can invest in partial shares of the mutual fund, so all that money can be contributed. So if you wanted to do that, you could hit add another Vanguard mutual fund. You could select from their field of things. You could say, show me target date. You could pick target date retirement 2055, and it would automatically go into that account, right? Kate could add another $1,000 here, and it would go right into that account. But if you do ETFs like Kate is doing right now, what you have to remember is that the money is going to go into that settlement fund. It's going to go into cash. And so when you make a contribution, whether it's a recurring monthly contribution or you're doing it manually like I'm showing you right now, what you have to remember is that you have to come in and actually invest that money. You have to go through the buy process like we did last to make sure your money is actually invested and working for you and not just sitting in cash inside that suitcase, not growing, not investing. Okay, that's the key. And so when you do that, we're going to cancel this in a second, but let's say Kate wanted to add $500. If she hit continue, It would tell you what account is that money coming from. Is it the bank that you originally connected? Are you going to send Vanguard a check, or are you going to exchange it from another fund? You want to sell one fund and buy another one, okay? In most cases, it's going to come from your bank account, all right? So hit cancel, because we're not going to do this for Kate. We're going to cancel the transaction, and we're going to come back, and now you're an investor. You have a Vanguard fund. Your money is working for you. Your IRA is working for you, and you can just keep saving for your future. Congratulations.